Usually when we talk about luxury here in the United States, your mind probably goes straight to, I don't know, like a sports car or maybe a designer watch or a vacation home.
Right. Yeah.
We think of luxury as something extra, right? Something aspirational. But what if I told you that for millions of people right here, right now, a simple standard checking account is a luxury that they simply do not have?
It's wild to think about.
It sounds almost impossible. I mean, we're in an age where you can pay for a coffee with your smartwatch, so the idea that a basic bank account is out of reach feels completely disconnected from reality.
Oh, absolutely.
But it is a very real, very startling, hidden truth.
Hmm.
So today, we are taking a deep dive into this incredibly eye-opening article that breaks down the complex world of the unbanked versus the underbanked.
It's a huge issue.
It really is. And our mission for this deep dive is straightforward, but, really vital. We want to explore the invisible financial barriers affecting millions of Americans, uncover the hidden, honestly staggering costs of being outside the traditional banking system, and, most importantly, map out the specific solutions to bridge this massive gap.
Yeah, that solution part is key.
Definitely. I am so excited to have our resident expert here with me today to really pick your brain on the systemic reasons behind this issue. Because, it's not just a matter of people forgetting to sign up.
No, not at all. Thanks for having me. And, when you look at the actual mechanics of financial exclusion, it stops looking like an accident and starts looking like a series of very tall, very intentional walls.
Wow, intentional walls.
Yeah, and for you, the listener, understanding these walls is really the first step to dismantling them, whether that's for yourself or for people in your community. Because the financial ecosystem is, well, it's heavily optimized for people who already have money.
Right.
Which leaves basically everyone else to navigate a much more hostile terrain.
Okay, let's unpack this. Because before we can even fix a problem, we have to grasp the sheer scale of it. And the data from the FDIC's 2023 survey is just staggering.
It really paints a picture.
It does. We are talking about 19% of American households. That is roughly 24.6 million people who either have no bank account at all or they severely struggle with access to traditional banking.
This massive numbers.
24.6 million. That's more than the entire population of Florida.
Yeah.
But the source material breaks this massive group down into two distinct categories, right? The unbanked and the underbanked. So can you walk us through exactly what the difference is? Because they sound similar, but the reality of their daily lives seems quite different based on the research.
Yeah, the daily friction these two groups experience operates on completely different levels. So let's start with the unbanked.
Okay.
This makes up about 4.2% of U.S. households, which translates to roughly 5.6 million people. And the unbanked, they have absolutely zero relationship with traditional financial institutions. Right, zero. No checking account, no savings account at a bank or a credit union, just nothing.
Wow.
So to survive in a modern economy, they have to rely entirely on this sort of shadow system of alternatives. We're talking about prepaid debit cards you buy at the pharmacy or, getting money orders just to pay rent.
Right, because you can't just write a check.
Exactly. Or relying strictly on cash transactions. Or they might use payment apps like PayPal or Venmo. But, and this is crucial, they're using those apps without actually tying them to a traditional bank account in the background.
Oh, I see. So they are entirely off the traditional grid, relying on workarounds for literally every single financial move they make.
Which is incredibly time-consuming and really precarious. Now, compare that to the underbanked, which represents a much larger demographic.
How much larger?
We're looking at 14.2% of U.S. households, so that's about 19 million households.
Wow, okay.
And the underbanked, they actually do possess a basic bank account.
Oh, they do.
Yeah, they do. But, and this is the defining mechanism here, that bank account fails to meet their actual cash flow needs.
Gotcha.
So in the past 12 months, they've been forced to use at least one alternative financial service just to keep their heads above water.
So the bank account just isn't enough.
Right. They might have direct deposit, but they still have to supplement their traditional banking with payday loans to bridge a gap before payday, or auto title loans, or rent-to-own services.
Or like check cashing storefronts.
Exactly. Having an account doesn't automatically mean you are fully integrated into the financial system.
I was thinking about this while reading this source, and it feels like it's like the unbanked are completely locked out of the building, right? While the underbanked are allowed in the lobby, but they still have to go out to the overpriced vending machines in the alley to actually get dinner.
That is, yeah, the reality of those overpriced vending machines in the alley is a perfect illustration of the alternative financial services market.
Because it's so expensive.
It is. These companies operate storefronts in neighborhoods where traditional bank branches have already closed down, and they know their customers have virtually no other choice.
Right, captive audience.
Exactly. Because there is often limited state regulation capping their rates, these alternative services charge exploitative, really opaque fees. They capitalize on an audience that just desperately needs immediate liquidity.
Wait, okay, so if these alternative lenders are fleecing them this badly, and the demand for financial services clearly exists, why aren't traditional banks fighting to win over these customers?
Well, it comes down to how banks operate.
Or, from the consumer side, why don't these folks just walk into a bank, go up to a teller, and open a standard account to escape those alleyway vending machines?
The primary hurdle is structural. Specifically, it's about account minimums.
Okay, the minimum balance.
Right. Traditional banks operate on margins that require accounts to hold a certain amount of capital to actually be considered profitable for the bank.
Ah, I see.
And the data shows that 42% of unbanked households simply lack the funds to meet these minimum balance requirements.
42%, that's almost half.
Yeah. Banks frequently mandate that you have to keep anywhere from $100 to $500 in the account at all times just to avoid a monthly maintenance fee of like $10 to $15.
Which is a lot if you're strapped for cash.
Exactly. If a household is living paycheck to paycheck, permanently tying up $500 in a checking account is mathematically impossible. That money is already earmarked for groceries or rent or utilities.
And if their balance drops to like $499, they just get hit with the penalty fee anyway.
Exactly.
Which totally explains another data point from our source. It said nearly 35% of unbanked consumers actively avoid banks out of sheer terror that high fees will just drain their already limited funds.
Very valid fear.
But I want to push back on the logic here a little bit.
Sure.
Because people are avoiding banks because they can't afford a $15 maintenance fee, right? But then they end up relying on alternative services that cost them significantly more.
Oh, way more.
How does that math make sense for anyone? I mean, the article breaks down the cost of check cashing, and the numbers are just staggering.
What's fascinating here is the psychological framing of these costs.
Yeah.
And really the sheer irony of the poor tax.
tax, yeah.
Being poor is fundamentally an incredibly expensive condition. Let's look at the mechanics of check cashing, for example.
Okay.
These services typically take a cut of 2 to 5% of every single check you cash.
Every single check.
Every single one.
Yeah.
And if you use a prepaid debit card to hold that cash safely after you cash it, you are paying another $5 to $10 a month just to keep the card active.
Wow.
Plus individual transaction fees every time you swipe it at a register.
It's like trying to carry water in a leaky bucket, and every time you try to patch a hole, the bucket itself charges you a fee.
That's a great way to put it. The cumulative drain is just massive.
Yeah.
The source actually provides a very clear mathematical example of this. Imagine a family bringing in $2,000 in monthly paychecks.
Okay, $2,000 a month.
By utilizing a check cashing storefront, they forfeit between $480 and $1,200 annually just to turn their own labor into usable currency.
That is insane. Up to $1,200 just to get their own money.
Right. And that amount easily dwarfs the cost of any traditional bank's monthly maintenance fees.
So why do they do it?
Because the alternative fees are extracted instantly at the counter. A few dollars here, $10 there. So it feels like an unavoidable tax on existence, rather than this ongoing subscription fee you have to actively worry about drafting from your account at the end of the month.
I get it. It's out of sight, out of mind. But it's not merely the money they're losing to fees, right? It's the wealth they're entirely prevented from building.
Exactly. The opportunity cost.
Because the source notes that without a bank account, you obviously can't access high-yield savings accounts, which might offer, a 4% interest rate right now.
Which is substantial.
Yeah. If a family saves $100 a month in a shoebox under the bed, it just sits stagnant. But if they put that same $100 a month into a high-yield account, compound interest means that over a decade, that money grows to over $14,700.
It's a huge difference.
You are literally losing thousands of dollars of free money by keeping it in a shoebox. And not to mention, if that shoebox is lost or stolen or there's a fire, that cash is gone forever.
Poof, gone.
Whereas with a bank, you have FDIC insurance protecting your deposits up to $250,000.
The vulnerability of living purely on cash really cannot be overstated. But, the landscape is shifting to solve this specific mathematical trap.
How so?
Well, the source prioritizes looking at online banks. Institutions like Capital One, for example.
Oh, right, the digital-first banks.
Exactly. Because digital-first banks have incredibly low overhead. They don't have to lease physical real estate or pay for utilities on branches or staff dozens of tellers.
So they pass those savings on.
Right. They compete for market share by offering completely fee-free checking accounts with zero minimum balance requirements.
Wow, okay.
So escaping the poor tax really means recognizing that the traditional brick-and-mortar model just isn't the only legitimate way to store your money anymore.
Okay, so if the math so clearly favors getting a bank account, especially a free online one with no minimums, then money cannot be the only barrier keeping millions of people out.
It's definitely not the only barrier.
Because if it were just about finding a free account, the problem would be solved by a quick Google search. So what else is keeping the door shut?
The door is often locked by a system called check systems.
Check systems, okay.
Yeah, it's essentially a specialized background check database specifically for banking.
I don't think a lot of people even know that exists.
Most don't until it's too late.
Hmm.
If you have ever had unpaid overdraft fees or bounced a check or had an account closed by a bank for negative balances in the past, your name likely gets flagged in check systems. And once your profile is flagged, walking into a new bank to open an account becomes nearly impossible.
But hold on, let me play devil's advocate for a second here.
Go for it.
If someone has a history of bouncing checks or leaving unpaid overdrafts, shouldn't banks have the right to protect themselves? I mean, they are businesses after all.
Sure.
Why is it unfair for them to deny an account to someone who has, mismanaged one in the past?
Banks absolutely have a mandate to manage risk. The issue with check systems isn't the concept of risk management, it's the execution.
What do you mean?
It operates as this unregulated shadow credit bureau. Unlike a standard credit score, which fluctuates based on your current responsible behavior, check systems is essentially a binary penalty box.
Oh, so it's just yes or no.
Right. And the records stay active for 5 full years.
5 years?
Yes. It acts as a blanket ban from traditional banking for that entire half-decade.
That is so harsh.
It is. If you made a financial mistake during a medical emergency or a job loss 3 years ago, but you're completely stable now, the system just doesn't offer grace or nuance. It simply shuts the door.
So it's basically a financial permanent record that doesn't care about context. You bounce a check when things get tight, and you're exiled for 5 years.
Basically, yeah.
I can totally see how that feeds directly into the trust deficit mentioned in the research. The FDIC survey notes that about 15% of unbanked households cite a fundamental lack of trust in financial institutions as their primary reason for staying away.
And the historical context of that mistrust is entirely valid.
For sure.
We are talking about communities that have witnessed high-profile banking scandals, really aggressive cross-selling tactics, and predatory overdraft policies that disproportionately target low-income accounts.
Right, the fees that just pile up.
Exactly. If you have been burned by surprise overdraft fees that spiraled out of control, or you were pushed into financial products you didn't even need, and then you get blacklisted by an opaque database like check systems, well, the rational response is to retreat to cash.
Yeah, you just opt out entirely.
Even if the check cashing place charges a premium, the transaction is at least completely transparent. They tell you the fee up front, you hand them the paper, they hand you the cash.
Right.
There is no surprise $35 fee hitting your account at midnight.
That predictability, even if it's expensive, feels safer than engaging with a system you actively distrust.
Exactly.
So how do we bridge that specific gap? If you are sitting in that 5-year penalty box right now, what is the move?
The source outlines several specific pathways back into the system, thankfully.
Okay, good.
First, you want to look for second chance banking programs.
Second chance banking.
Yeah. Many institutions recognize this gap, and they've designed products specifically for people with rocky histories. Like Wells Fargo offers their Clear Access banking account, and digital platforms like Chime operate with a strict no check systems policy.
Oh, that's huge.
It is. They focus on providing the basic functionality of a checking account without those punitive background checks. And furthermore, for the trust issue, the source really suggests turning to credit unions.
Because they operate on a fundamentally different business model, right?
Precisely. Credit unions are member-owned rather than shareholder-driven.
Right, which changes their whole motivation.
Exactly. Their mandate is to serve their community, which often translates to much more personalized service, lower fees, and just a higher degree of accountability.
That makes sense.
And it's crucial to remember the regulatory backstop that exists for consumers, too. The Consumer Financial Protection Bureau, the CFPB, was established to hold financial institutions accountable.
So you have somewhere to go if things go wrong.
Right. They operate a robust public complaint system. And banks face massive financial penalties for violating consumer protection laws. You are not powerless in these interactions.
Okay, so we've covered the financial hurdles, the minimums, and the exploitative fees. And we've covered the historical and psychological hurdles, the check system's penalty box, and the deeply rooted lack of trust.
Right.
But let's look at a totally different scenario. What if someone has the money for a minimum balance, they have a spotless financial record, they trust the system, and they still find themselves unable to get an account?
That happens more than you'd think.
The source dives into physical and generational barriers. Specifically, simple logistical inconvenience. Traditional branch hours seem perfectly designed for a bygone era.
Oh, standard 9 to 5 banking hours are highly exclusionary in a modern economy.
All right, because who's actually freed then?
Exactly. If you're an hourly wage worker, a shift worker, or someone managing multiple part-time jobs, you cannot just take a leisurely lunch break to visit a teller.
No.
And the logistical friction goes much deeper than just the time on the clock. The process of opening an account requires strict compliance with Know Your Customer regulations.
Which means producing a very specific stack of government documentation to prove your identity and your permanent address.
Yes, and that is not easy for everyone. Now, imagine the reality for a recent immigrant, a person experiencing transient homelessness, or someone who has recently had to flee a domestic violence situation.
Oh, wow.
Gathering a pristine stack of documents proving a stable, permanent address might be literally impossible in that moment. The banking system requires rigid stability to grant access, but that very access is often the foundational tool needed to create stability in the first place.
It's a structural catch-22.
Exactly. It's incredibly difficult to navigate.
It's incredibly frustrating. But then the research highlights a completely different demographic, a group that has all the documentation in the world, they have smartphones, they have stability, but they are actively choosing to stay away from traditional banks.
Ah, yes.
Talking about Gen Z, the data shows that 62% of Gen Z lack traditional bank accounts. So what does this all mean for the younger generation? Are they just like hacking the system by using Venmo and Cash App for everything?
If we connect this to the bigger picture, they might feel like they are hacking an outdated system, but they are actually suffering from a dangerous illusion of financial inclusion.
Illusion of inclusion. I like that.
It's true, though. Gen Z is inherently tech-forward. They rely heavily on digital wallets and payment apps because the user experience is just seamless.
Right. It's so easy.
You can split a dinner bill, pay rent to a roommate, buy something online with just a fingerprint. For daily microtransactions, it functions perfectly.
I sense a massive but coming here.
The danger lies in long-term financial health, specifically regarding credit.
Ah, credit scores.
Right. Peer-to-peer payment apps do not inherently build a credit profile. Credit bureaus operate on the mechanics of revolving debt. They want to see how you manage borrowing money and paying it back over time, not just positive cash transfers between friends.
So Venmoing your buddy for pizza doesn't count.
Exactly.
Yeah.
When you are 20, living on a payment app is fine. But when you turn 26 and you want to finance a car or rent an apartment in your own name or apply for a mortgage, the lender will pull your credit file.
And what happens?
If your entire financial life has existed on a payment app completely disconnected from a traditional banking ecosystem, you will return a blank file. To the credit bureaus, you effectively do not exist. You are financially invisible.
That is a huge blind spot. You think you're being incredibly modern and efficient by avoiding banks, but you are actually sabotaging your future borrowing power because the system just doesn't recognize your data.
Precisely. It's a rude awakening for a lot of young adults.
So what are the practical solutions for these logistical and generational hurdles?
For the logistical hurdles, the rigid hours and branch access the solution heavily leans into modern digital banking.
Right. Skipping the branch entirely.
Yeah. If you have the documentation but simply can't make it to a physical branch during business hours, online banks with 247 customer service, like Ally Bank, allow you to apply, upload documents, and manage everything entirely on your own schedule.
Which is so much easier.
It is. And for Gen Z, the advice is highly specific. Utilize digital banking as a bridge to the broader financial system, not as a permanent isolated island.
A bridge, not an island. I
Yeah.
like that.
Ensure you are using tech-forward apps that actually offer full FDIC protection and actively report to credit bureaus, rather than just floating uninsured cash in a peer-to-peer app.
This brings us to a really crucial part of our deep dive today. Let's shift into the practical application.
Let's do it.
For you, the listener, whether you are trying to optimize your own financial setup or you're trying to help someone you know navigate this, the source provides an incredible decision framework. Think of it as a learner's playbook for financial inclusion.
It's a great tool.
It really is. Let's synthesize all these mechanics we've discussed. I want you to really think about anyone in your own life, maybe a younger sibling entering the workforce, a coworker or a friend going through a tough transitional period who might be trapped in this cycle. This isn't just abstract economic theory. This is actionable advice that literally saves thousands of dollars.
The utility of this framework is all about accurately diagnosing the specific barrier and then applying the correct tool.
Okay, break it down for us.
So if you or someone you know is dealing with history issues, the very first step is to request your check systems report. Review it meticulously for accuracy. Clerical errors happen constantly.
Just like credit reports.
Exactly. Once you know where you stand, seek out the basic second chance accounts we discussed.
Okay, what if fees are the main issue?
If the primary concern is the fear of fees, you need to sit down and mathematically calculate what you are currently surrendering to alternative services. Compare that hidden cost to the zero fee, no minimum online banks.
The math will definitely steer you away from the check cashing storefront.
It inevitably does.
And what if you fall into that young, tech-forward Gen Z demographic?
Embrace mobile-first digital banks, but verify the fine print.
Check the fine print, always.
Do not assume your digital wallet protects you. Verify that they have full FDIC insurance and that they offer products that actually build a credit history.
And what about folks with just really limited income?
If the barrier is a strictly limited income, prioritize zero minimum accounts at local credit unions or online institutions. The financial system can accommodate you. You do not have to be wealthy to secure a safe place to store your capital.
It's about finding the precise fit for your specific life situation rather than just defaulting to the massive brick-and-mortar bank on the corner simply because they have a bright sign.
The core belief woven throughout this source material is vital to understand. Banking exclusion is rarely a personal failing.
Right.
It is overwhelmingly the result of structural systemic barriers. However, those barriers can be bypassed with the right approach and the right knowledge.
You just have to know how to navigate it.
Exactly. The strategy is to seek out financial institutions that actively prioritize accessibility, rather than trying to force yourself to comply with systems that were, frankly, designed to filter you out.
Start with one basic accessible account, establish your footing, stop the bleeding from those alternative fees, and then gradually build toward a more comprehensive financial relationship as your stability improves.
That's the perfect playbook.
Well, I want to say a huge thank you for helping us navigate this incredibly important topic today. By walking through these mechanics, it becomes so clear that a bank account is not just, a digital vault to store your cash. It is the fundamental building block for long-term financial health, wealth generation, and economic stability.
The mechanics of the system dictate the outcomes, and understanding them changes everything.
Absolutely.
But before we sign off, I want to leave you, the listener, with a final, slightly provocative thought to ponder.
Oh, I'm ready. Let's hear it.
As our society rapidly moves closer and closer to a completely cashless model, and everyday transactions from buying a bus ticket to grabbing a coffee become purely digital, will the divide between the banked and the unbanked evolve into a terrifying data divide?
A data divide?
Yeah, a world where traditional banks protect your privacy, while the unbanked are forced to use alternative apps that harvest and sell their transactional data just to survive.
Wow. That is a chilling and deeply important thought to leave on. Keep thinking about that invisible barrier and keep looking for ways to bring people into the fold. Remember to keep following for more investment info and open the full version of the source if you found this information helpful. Consider subscribing, sharing this deep dive with someone who needs it. And as always, thanks so much for your support. We will see you on the next deep dive.